and continue taking your views with regard to markets. Let me bring on board Gautam Trivedi, Managing Partner at Nepean Capital, joining us this morning. Gautam,
Hi, morning.
investor.
Good morning.
Hi, very good morning. This is Harsh here. So, Gautam, the investor mood looks sanguine, at least at this point. It's difficult to kind of, at least the FII mood continues to look extremely weak. All the bad news already priced in, you reckon? Is this a good time to go out and buy?
Yeah, so I think let's make a distinction between the fundamentals of the economy and the stock market. And as it may sound amusing, but the fact is that the two, many times in my 30 years odd of being in the markets, to have moved in opposite directions. And this is one of those moments where I think they're still moving in opposite directions. So, from an optical outsider's perspective, when you're sitting outside from an FI perspective, we are the second worst performing market year to date among all emerging markets. We're down on a dollar basis, a negative 8%, and second only after Indonesia, which is down about, I think about 20%. So I think the reality is that from a FII perspective, India looks expensive. India doesn't have AI or commodity plays like Korea, Taiwan, or commodities like Brazil, and earnings growth obviously hasn't been that great. When back home in the US you have 17 to 18% dollar earnings growth, why take a risk and go to emerging markets and out of that India? So these are some of the issues from an FI perspective that you grapple with. But like I said, the domestic flows really is what's keeping this market where it is, and will, I think, take it even higher from these levels. Because the money flow coming in from retail investors into mutual funds, into insurance companies, and of course, on top of that, you have the pension funds adding as well. So year to date, we have seen about $35 billion of DII investment versus about 22, I think, of $22 billion of net selling by FIs. So the market's still holding up from a rupee perspective. And that tells you that, the impact of the FI selling is being more than absorbed.
Gautam, you spoke about the fact that the market valuations are high, but at one point in time, the Indian market was known for as a consumption market, and that's why you had a lot of foreign investors coming into this market. You don't see the consumption play relevant at this point in time for foreign flows to come in?
No. So the way foreigners are looking at the world right now, it's AI and the rest of the world. So if India is not an AI play, it's not a way to look at AI in any meaningful way, then why invest in India at all? That's unfortunately the case. And if you see since September of 2024, when FII investment peaked, after that we've seen about almost $55 billion of a record selling. With the exception of the month of February this year, every month we've seen net selling by foreigners. So I think, what I tell foreigners, by the way, this is the part I want to share. I tell them India's not going to be cheap. And India's not going to be cheap only because of the fact that you are seeing domestic flows. We haven't even reached the halfway mark. And then I'll give you some statistics which are interesting. If you look at the top 5 states, and I look at the unique investor base, I'm not counting demat accounts, I'm counting the unique investors, which is now about 130 million or 13 crores. 5 states account for 47.5% of the unique investor base. The top 10 states account for 73%, which means the equity penetration is still left in a meaningful way to spread across the country, which it should. But the point is that why are we seeing such strong numbers? Why did, in the month of March, did we see 40,000 crores of net inflows? April numbers came out yesterday, 38,500 crores of net inflows. So that tells you that, domestic investors are really not too concerned about the current economic situation and are putting money in for the long term.
Is it also the alternative to putting money in bank where you don't get enough returns, and so they're trying to get returns from an alternate investment source as well, right?
Absolutely. And also don't forget, you pay long-term capital gains on your capital gains whenever you make them. Unlike in bank, it's full tax. So whether it's an FD or a savings account. So there's also a bit of a tax arbitrage here, if you can call it that.
If that is the case, which are the sectors that you should be looking at? Because from a valuation point of view, almost all sectors are at high. FIs are not interested in taking those valuation at this point in time because they are going after chasing AI trade. But this valuation is not going to come down, and at some point in time the earnings are going to come back and they have to buy at a higher valuation.
Yeah, so I think the sectors that we like are power, any data center play, hospitality, and you saw the numbers that came out yesterday from Indian hotels. They were a blockbuster, and of course, since Puneet Chhatwal's taken over, the stock has basically been a 10-bagger. So that's as an example. And by the way, full disclosure, we actually own the stock. But point I'm trying to make is, the hospitality industry itself is on a roll. Indians are traveling more than they ever did before. And given how expensive it's now become with respect to the currency, where it is, and plus the cost of foreign airline travel, you will see more Indians holidaying within India than actually going overseas. So I think these are all positives. We also like exporters. Exporters will start to benefit from the India-EU trade, the India-UK trade to some extent, of course, and whenever the India-US trade agreement finally gets signed. So I think exporters is something you want to watch out for. Now, obviously, the fall of the rupee obviously helps. I was in the US recently, and every time I go to the States, I go to visit Costco. What I found disappointing, and which in itself could be a potential opportunity, is that I found very few products made in India. And I think the opportunity therein lies that we could, not just in the clothing area, but across the board. When you walk into a large warehouse-style department store, big box retailer, why are so many products made in China, Vietnam, Mexico, Indonesia, Bangladesh, and Sri Lanka obviously dominate the clothing area? Why can't we be more competitive? So I think that's something which clearly our Commerce Minister is trying to solve for, and hopefully that will benefit exporters out of India.
Gautam, how should one look at IT in this environment? How are you looking at it?
Yeah, I mean, you're asking me a question on a day when TCS, Infi, and HCL Tech have hit a new 52-week low. And I was asked a similar question on your channel and other channels even 6 months ago, and I said, stay away. And that view hasn't really changed, because I think these are good companies, very smart management, no debt. So it ticks a lot of boxes. But the question is, where do you go from here? It's a new era that's coming in with AI, and how are you positioned to take advantage of that, leverage that? We haven't seen really any major evidence of that, with the exception, I guess, of TCS, which just committed $7 billion in the data center space. So I think until we don't see evidence of that, valuations are very attractive, but they might get cheaper if they don't adapt to AI quickly.
Okay, Gautam, I'm afraid I'm going to have to leave it at that, at least for today's conversation. Thank you so much for coming in and speaking to us.
Thank you.
All right, viewers, what we'll do is slip into a very short break. We'll have a lowdown with regard to what to make of energy markets going forward. We'll have the Goldman Sachs energy analyst, Nikhil, come in and speak to us. In fact, he's in studio with us on the other side of this break. Stay with us.